A huge rally on Wall Street today. We're all happy about that as optimism grows for an end to the Iran war. Joining me now, John Carney, financial journalist, and Lou Basenese, Fox Business contributor. Gentlemen, thank you. We're all smiling. I mean, there's nothing not to be smiling about with regard to the markets. But is it sustainable, Lou?
It is sustainable. I think this is an indication that we're ready for this conflict to be over because the underlying market fundamentals are poised for a resurgence. You've seen earnings growth of double digits for 5 quarters in a row. Fundamentally, U.S. companies are on solid footing. We just need to eliminate this inflated oil price, which is dragging everything down.
And even Jay Powell, God forbid, even Jay Powell, John, suggests that in fact, energy, I'm quoting him here, he says, energy disruptions tend to be short-lived. So it doesn't seem like he's so nervous Nelly on the inflation issue.
That's right. I think actually one of the drivers of the market today was really people getting over the idea that the Fed was going to hike because of high oil prices. That never really made sense, but people were worried that the Fed would look at it as inflationary. Jay Powell made it very clear that the Fed does not see high oil as inflationary. They'll look past that and look to whether the economy is actually weakening because of high oil, which I think then the other part is exactly what we just said, where the economy will not weaken if we get this war wrapped up very quickly. Donald Trump said about 5 weeks ago that this would be a 6-week affair, so we're about a week away from the conclusion of the war.
And if we see the Strait open, I mean, or closed down from its openness right now, Katie barred the door for the markets, right? I mean, will that be smooth sailing all the way to the midterms if the Strait opens up now?
Yeah, if the Strait opens up, and I don't see any reason why it would not. Iran closed it because they were being attacked, and I think all of their neighbors need that open. We don't buy much oil out of there. All of the economies of the Persian Gulf depend on getting oil out of the Persian Gulf through the Strait of Hormuz and to the rest of the world. They need it to open. It will open, and I think then we will see the oil price crash. Gas prices will come down. They always come down a little bit slowly, but they will come down. Yeah. We won't be looking at $4. We won't be looking at $5 gasoline, which would be a real problem for the economy. Yeah. We'll be looking back at $3.
I agree. The midterm math has everything to do with gasoline. So every $10 increase in the barrel of oil is about a 25-cent increase on gas for 2 months. You've seen we've gone from 60 to 100. Gas is up $1. We need this, a pullback of $20 to $30 in crude before August to get to where the midterms and no one's worrying about gas prices.
Wonderful supply side initiatives that are causing markets to boom as underneath all of this concern about the war that's going on. And Jamie Dimon was on. He was just one after the other. He read through all of the incentives that are in the economy right now that could lead to a boom time instead of a kind of anemic GDP forecast because of the war. Let me just play a little soundbite of him, Jamie Dimon.
If you look at our country, we've grown in the last 20 years at 2% a year. It should have been 3% a year. Had it been 3%, we'd have 20,000 per person more GDP today. And the slow growth has hurt the lower income the most.
And he was particularly bullish about the Trump accounts. He loves the idea of giving young kids as they grow up a stake in the market.
Yeah, look, it's good to see him being so encouraging and bullish because his previous comments at months past was he was a little bit skeptical about where we'd go.
Not today.
Not today, but I think he's nailed it, right? The Trump accounts are key. The key to investing is starting early. It doesn't matter what you invest in, just start early and often. I think that's going to be a huge boon to this economy as we move into the later years from now. But back half of the year, I mean, we talked about it before, the tax cuts, the reinvestment incentives for businesses, capital expenditures, all that kicks in the back half of the year.
The thing I love about the Trump accounts, it's great defense against socialism, because the socialists, Mamdani wants to have more control over the schools right now so he can indoctrinate the kids into socialism. They can't be indoctrinated if they're little capitalists.
I talked to a high school teacher who actually teaches social studies. He says this is going to make financial education a lot easier because kids who have investments will pay attention. When you talk to kids about the stock market and they're in 8th grade, it doesn't seem to mean anything to them. But when they can actually know that it affects something that's coming to them, it will make a big difference. He was excited. He thinks it'll make it easier to teach these kids.
What about the socialists at the Federal Reserve? I mean, you still have these people. I know they wouldn't use that term to refer to themselves.
Yes.
Donnie at least is honest enough to do that. But are we going to get a change at the Fed significant enough over the next couple of months to really force out all of the people who don't believe in supply side incentives?
I think you absolutely have to, and we're waiting on Walsh. We can argue whether or not Powell's going to be political, but I said this. I mean, he's just coasting into the finish line of his term, I believe, like many seniors in high school right now, just waiting to get to the college, the other side of this. I think what's really key is when are we going to get Kevin Walsh in there, right? When are we going to resolve that issue that's out there? Because we know he has a clear mandate and believes very directly.
Well, the last time we were at this table together with Larry, we were talking about whether he was going to stay there forever. He pretty much said he could do that if the Senate can't get its act together.
Right. He can stay on the board till 2028. He should not do that. He should step aside, which is what every Fed chairman has done. Yeah. But while Walsh will need votes for monetary policy, he doesn't need it to run the Fed. The chairman actually runs the Federal Reserve as an institution. He can reform the way they do their economic calculations, their economic research. A lot of what goes on at the Fed right now is actually pretty broken. There's too much left-wing research that goes on. They spend a lot of time trying to justify left-wing policies. He can move them away from that. They should instead be trying to figure out how the Trump economy really works instead of trying to figure out how to stop it.
At the very least, don't be knee-jerk against growth in the economy because you think it's a bad thing. John, good to see you. Lou, great to see you as well.